encourage the SEC to continue these efforts, including advancing important rulemaking efforts related to capital formation and corporate governance. Commissioner Peirce is highly qualified for her position, previously serving as a senior counsel at this committee and currently serving as an SEC Commissioner since January 2018. Next, we have Mrs. Carolyn Crenshaw. Mrs. Crenshaw has worked at the SEC since 2013, working in the Office of Compliance, Inspections, and Examinations, the Division of Investment Management, and as counsel to Commissioners Kara Stein and Robert Jackson. In addition to her work at the SEC, she is a captain in the U.S. Army Reserve Judge Advocate General's Corps. Mrs. Crenshaw, we thank you for your service. Turning to Kyle Hauptman, who has been nominated to the board of the National Credit Union Administration, the NCUA plays a critical role in overseeing and ensuring a major segment of our nation's community financial institutions, federally insured credit unions. Mr. Hauptman is well prepared to join the NCUA board thanks to his prior government and private sector experience. Mr. Hauptman has served as the economic policy advisor to Senator Tom Cotton since 2017. He also did work on S-2155, the Economic Growth, Regulatory Relief, and Consumer Protection Act, which contained several important provisions that provided regulatory flexibility and relief for credit unions. Before his government service, Mr. Hauptman had a career in the financial services industry where he developed expertise managing liquidity and credit and interest rate risk in fixed income portfolios. In the coming months, both the SEC and NCUA will be on the front lines helping consumers, retail investors, and businesses of all sizes recover from the economic impacts of the COVID-19 emergency. If confirmed, I look forward to working with each of these nominees on many important issues within their respective policy areas. Congratulations again on your nominations, and I again thank you and your families for your willingness to serve. Senator Brown?
Thank you, Chairman Crapo, for holding today's hearings. First, I want to take a brief moment to remember my friend and colleague, Congressman John Lewis. Let us honor his legacy by following his example of leadership and courage and his unrelenting fight for justice. I welcome today's nominees. Congratulations to the three of you and to your families. The committee will consider two nominees, as the chairman said, of the Securities and Exchange Commission, Commissioner Hester Peirce for a second term, and Ms. Caroline Crenshaw and Mr. Kyle Hauptman as a nominee to be a board member of the National Credit Union Administration. Today also marks, literally today, the 10-year anniversary of the passage of the Dodd-Frank Wall Street Reform and Consumer Protection Act. We passed Wall Street Reform to prevent another financial crisis. Right now we face an even greater, more complex public health and economic crisis and a looming housing crisis. Families are making impossible decisions about how to pay their rent and put food on the table, or are grieving the loss of a mother or a father or a child. And we know one of this pandemic's greatest tragedies is that people die alone. It's Black and brown Americans disproportionately affected, working on the front lines to get us through this and helping to save lives while themselves too often grieving lost ones. Wall Street reform was meant to prevent catastrophe in our financial system. We need to aim higher than that today, yet Wall Street has spent years trying to dismantle the basic, important protections put in place through Dodd-Frank. Republicans and the Trump administration have been all too happy to oblige Wall Street. It didn't take long for Wall Street to recover from this crisis. They were making record profits. They were refusing at the same time to pay their workers a living wage. This ultimately caused the wealth gap to grow even further. Current coronavirus crisis is showing us what happens when we don't protect working people. We can't leave them behind again. In Leadership Matters, we see that every day. 140,000 Americans dead on the president's watch. We're just 5% of the world's population, yet we account for almost 30% of the world's deaths. It's not because we don't have good doctors and smart scientists and hard workers. It's because of leadership, or precisely lack of leadership. And those who this body confirms the leadership posts today and other days also matter. All of the nominees have confirmed can support policies that protect these working families who are consumers and investors and credit union members. You can encourage companies and credit unions to offer fair products to Americans left out of our financial system and make sure our markets and economy work for everyone. The question facing us today is, will you show that leadership and make those kinds of choices? If confirmed, Ms. Peirce would continue her work as a commissioner for 5 more years. She brings the experience of working for the last 2 Democratic commissioners. Ms. Crenshaw brings the experience of working for the last 2 Democratic commissioners fighting for investors. Her continued service in the military allows her to bring a very different perspective to this job. If confirmed, she'd be the first commissioner in modern times to be in the active reserve, joining a handful of commissioners over the history of the SEC who have served in the armed forces. Commissioner Peirce and Ms. Crenshaw, you'll be called upon to tackle market swings and investment scams related to the pandemic. You must also keep your eyes on existing problems that, as is so much during the pandemic, that are getting worse. As the biggest companies and banks in particular have grown and become more powerful, we've seen corporate executives pay themselves with stock buybacks while at the same time laying off workers, cutting their pay, and underinvesting in their communities, all while avoiding any accountability. The SEC has a role in addressing each of these issues. Executives must be responsible to stakeholders, including workers and communities. That means the SEC shouldn't be changing its rules if it will take away smaller investors' ability to hold management accountable and raise important issues to other shareholders. Shareholder democracy is not just for the big guys. The COVID pandemic's also shown how important essential workers are to our economy and how little information companies disclose about their workers. The public needs more information about how a company engages with its workers because that helps investors understand how that company will deal with the crisis. And soon enough, corporate executives will want to reward themselves and their biggest investors again with stock buybacks. The safe harbor for stock buybacks has barely been touched in 4 decades, but it seems investor and market protections are chipped away at year after year after year. When we see companies spend as much as literally 100% of their profits on their own stock instead of capital investment or workers' wages, it's clear that stock buybacks rules need an overhaul. The COVID pandemic's also shown us how important it is to have local financial institutions that serve their communities. We've seen credit unions like the ones in my home state of Ohio work with their members to get through this crisis. The NCUA is key to making sure that our credit unions are resilient in good times and bad times. Yet the NCUA under the Trump administration has been chipping away at the very protections we put in place after the last financial crisis. Rules that protect homeowners and that set strong capital and loan reserve standards allow credit unions to lend in their communities during a downturn, much like the one we face now. Mr. Hauptman was a trader at Lehman Brothers when it failed, accelerating the financial crisis. You'd think he'd understand what a financial crisis can mean, yet he spent his career railing against the Dodd-Frank Act. Credit unions were created when other financial institutions weren't serving all their customers. We've seen them help those big banks. We've often seen them help those that big banks have left behind, including workers, including people of color. Now is the time to implement even stronger protections and safeguard consumers and our financial system. If confirmed, Mr. Hauptman will need to make sure that the credit union system continues to serve these communities, which means doing more to protect credit union members, not rolling back regulation. Mr. Hauptman has no credit union experience. He says he wants this job because people who love their financial institutions are usually credit union members. But being glad that credit union members serve their customers isn't a reason he's qualified to be one of the top 3 credit union regulators. It means he should be a credit union customer. Later today, this committee will mark up the nomination of Judy Shelton to be a member of the Federal Reserve Board. Even before the pandemic, my colleagues and I, many on both sides of the aisle, were concerned about her qualifications and commitment to helping working families and her independence from the president. She's advocated for failed Depression-era policies like a return to the gold standard and the removal of deposit insurance. In her nomination hearing, she failed to explain how she would handle an economic crisis. That hypothetical economic crisis is now a reality. We have no idea how Dr. Shelton would respond. That's why it's so important to carefully evaluate nominees based on their record their experience, their service to this country. That is whom you ultimately serve, the American people. A regulator's job is not to do favors for Wall Street firms and corporate interest groups that lobby us or revive debunked economic theories. We entrust regulators to make sure that all Americans can prosper in a safe financial system and a fair economy. Today, we need to hear from each of you how you will help and protect the American people and make our economy work. Thank you, Mr. Chairman.
Thank you, Senator Brown. We will now administer the oaths. And as we've discussed with each of you before, we will do it individually, but I will ask each of you to stand and raise your right hands and assure that we can see. And then I will go to each of you individually. Commissioner Peirce, do you swear or affirm that the testimony that you are about to give is the truth, the whole truth, and nothing but the truth, so help you God?
I do.
And do you agree to appear and testify before any duly constituted committee of the Senate?
I do.
Thank you. And next, Mrs. Crenshaw, do you swear or affirm that the testimony that you are about to give is the truth, the whole truth, and nothing but the truth, so help you God?
I do.
Thank you. And do you agree to appear and testify before any duly constituted committee of the Senate?
I do.
Thank you. And now, Mr. Hauptman, do you swear or affirm that the testimony you are about to give is the truth, the whole truth, and nothing but the truth, so help you God?
I do.
And do you agree to appear and testify before any duly constituted committee of the Senate?
I do.
Thank you. You may all take your seats. Your written statements will be made a part of the record in its entirety. And as you know, we have allocated you 5 minutes each for an opening statement. We will have you make those statements in the order that I swore you in. So, Commissioner Peirce, you may begin.
Chairman Crapo, Ranking Member Brown, and members of the committee, thank you for considering my nomination to be a member of the Securities and Exchange Commission. Having served as a commissioner for 2.5 years, I'm honored that the President has nominated me to serve another term. If confirmed, I look forward to using the next 5 years alongside the dedicated, experienced SEC staff to unleash the power of our securities markets in order to brighten more children's futures, build more Americans' retirement nest eggs, transform more communities across the nation, and rebuild an economy weakened by COVID. I'm delighted about the possibility of serving with Caroline Crenshaw, whose experience at the Commission, in the military, and in private practice would enrich our deliberations as a commission. I've spent the last 20 years working on financial regulation. Part of that time was spent working for Senator Shelby on this committee, and more than half of that time has been at the SEC. The agency has been extremely productive under the effective leadership of Chairman Jay Clayton, and I have enjoyed helping to carry out his regulatory compliance and enforcement agenda. On the regulatory front, we have enhanced retail investor protection by, among other things, codifying a regulatory framework for exchange-traded funds, adopting a best interest standard for retail brokers, and streamlining variable product disclosures. We also have applied a benefit cost lens to public company regulatory obligations, initiated changes to equity market structure so that it can serve investors in companies of all sizes, and scaled regulatory requirements for small entities. We have worked, with the urging of me, the ever-vocal Midwesterner, to streamline the capital raising process for small companies and entrepreneurs all across the country, and not just on the coast. We also have provided temporary relief for firms adjusting to the work-from-home environment and to small businesses trying to raise funds to survive the COVID crisis. An integral complement to our regulatory work is the Commission's compliance function, which includes inspecting firms and engaging with them as they seek to apply the rules to their unique facts and circumstances. I've supported cooperation with other regulators and compliance personnel at regulated entities to maximize our collective coverage and effectiveness. I also have advocated taking advantage of new technologies and overseeing the markets, with due consideration for legitimate concerns about data protection and over-surveillance. On the enforcement side, we've brought charges against entities large and small and individuals for a wide range of securities violations. Most recently, we have gone after securities violators hiding behind purported COVID-19 cures. Human nature being what it is, there's no dearth of bad conduct, so I've worked to focus our enforcement resources where they can make the most difference for investors and our markets. Collaboration with domestic and international colleagues runs through everything the Commission does. I had the opportunity to work with Commissioner Brian Quintens of the CFTC as we stood up our Dodd-Frank security-based swap regulatory regime. On that same issue, I cooperated with international counterparts to minimize market disruption and conserve regulatory resources. As the Commission's representative on one of the FSB's committees, I have supported sharing information and conducting joint analyses, but also have emphasized that decisions about how to regulate the U.S. markets need to be made here at home. One concern I had going into the job was the difficulty that regulatory agencies have dealing appropriately with innovation in and disruption of the industries they regulate. This problem is an institutional problem. Large bureaucratic organizations, whether public or private, don't handle change particularly well. I know, however, that the Commission can do better. If confirmed, in addition to continuing my work on strengthening the regulatory framework, I will redouble my efforts to create a more welcoming environment for innovation and new entrants. If the Commission takes up that challenge with the necessary seriousness and alacrity, our capital markets will remain dynamic, vibrant, and preeminent. Thank you for considering my nomination, and I'd be happy to take any questions you might have.
Thank you, Commissioner. Mrs. Crenshaw.
First and foremost, thank you, Commissioner Peirce, for those kind words, and if confirmed, I would be honored to work with you as well. Chairman Crapo, Ranking Member Brown, and distinguished senators of the committee, thank you for the opportunity to appear here today. It is an honor to testify before you regarding my nomination to be a Commissioner of the Securities and Exchange Commission, where I have worked for the past 7 years, and in whose mission I deeply believe. I want to thank all of those who have encouraged and supported me through this process: family, friends, colleagues, members of Congress and their talented staff, and many others whom I did not know prior to my nomination. It has been an educational and memorable journey. America's capital markets have powered the largest, most vibrant economy in the world. But our economy is facing unprecedented challenges, and now, more than ever, I believe we must do all we can to keep our markets transparent, competitive, and safe. All Americans must have the confidence to invest their hard-earned savings in their futures. That is the critical mission of the SEC, and it's the reason why I chose to transition my career from private practice to public service. I began my time at the SEC as a career staff attorney, helping oversee the institutions that manage millions of American savings. More recently, I served as counsel to 2 dedicated public servants, Commissioners Kara Stein and Robert Jackson, focusing on strengthening investor protections in our increasingly complex markets. It has been my great privilege to support the SEC's mission for the better part of a decade and see up close how our securities laws are built, case by case and rule by rule. But it's not just that experience that brings me before you today. I also carry with me the stories of soldiers, family, and friends who give the SEC's mission real meaning. As a captain in the United States Army Reserve, that mission means making sure my fellow soldiers have a fighting chance to secure the financial futures that they so deserve. As a sister of an entrepreneur, it means making sure our markets unite job-creating capital with individuals like my brother, who recently started a small business. And as a new mother, it means promoting the level playing field that will allow my family and millions of other American families to fund the rising cost of education by safely and confidently investing in our markets. If confirmed, I intend to bring all of these experiences, from sister to staffer to soldier, to bear on the SEC's mission. You can count on me to be a tireless advocate for the ordinary American families who are the backbone of our economy. And one of the biggest challenges for those families, and for the Commission, is the retirement crisis facing the country. The nation's shift from defined benefit pension plans, which my parents and their parents before them relied upon, to defined contribution plans, moved the responsibility of lifelong savings from employers to the individual. That has left too many hardworking Americans without sufficient resources for retirement. With investment decisions now largely in the hands of these individual Americans, the Commission should do all it can to ensure everyone gets a fair deal. It should provide clear, plain English information, and access to high-quality investment advice that allow individuals to distinguish between financial advisors on one hand and fraudsters on the other, and to fund their retirements in safe and sustainable ways. Additionally, the Commission should keep a close watch over the large institutions increasingly entrusted with the growth and safekeeping of American savings. As a Washington, D.C. native who grew up just blocks away on Capitol Hill, I have had the great benefit of being surrounded by dedicated public servants of all political stripes. If I have the honor of being confirmed, I will bring with me that commitment to public service and appreciation for diverse views as the Commission considers how best to help Americans grapple with the economic challenges before us. Thank you for your time, and I would be delighted to answer any questions you might have.
Thank you, Mrs. Crenshaw. Mr. Helton.
Thank you, Chairman, Ranking Member Brown, and members of the committee. It's an honor to be here. I'd like to thank the President and his team, plus the NCUA staff that have been so helpful. I want to especially thank Senator Cotton for his support throughout this process. I'd like to say hello to those watching online, especially my wife Kelly, who's pregnant with our first child, my brother Gabe and his husband Jeff, my siblings-in-law Katie and Marcus, and my parents-in-law Sue and Mike. When offered this nomination, I accepted immediately. It's a chance to help over 120 million credit union members achieve their financial goals. And if you encounter someone who actually loves their financial institution, there's a good chance you're speaking to a credit union member. These last few months have demonstrated the cooperative nature of credit unions as they waive fees and adjusted loans without anyone in D.C. telling them to do so. Many of us also recall the last government shutdown, when credit unions gained members by offering interest-free loans to furloughed workers. But this reputation depends on proper oversight from NCUA. Before the Senate, I worked on regulatory policy, including serving on a bipartisan SEC advisory committee. Prior to that, I was in the financial sector, focused on the same money markets where credit unions obtained financing. 12 years ago, I was a mid-level employee working in Asia for Lehman Brothers and wound up losing my job, my savings, and my work visa, all due to management that didn't fully understand the risk they were taking. That experience showed me firsthand the risks associated with liquidity, interest rates, and balance sheet management. This perspective should be both valuable and somewhat unique on the NCUA board. One of the best parts of serving in the Senate has been working with Arkansas credit unions and their companions in the Cornerstone Credit League in Texas and Oklahoma. I'm confident that if you speak to them, they'll tell you I've been knowledgeable and attentive regarding their concerns. And while I value those relationships, you can be sure I'll be an independent regulator who works only for credit union members and the taxpayers who ultimately back NCUA insurance. In addition to my interest in financial policy, I have a passion for public service due to my upbringing. My father worked in National Park Service for 32 years. Unfortunately, in the last 3 years, both he and my mother passed away, but I think they'd be proud to see me here. I should mention both were lifetime Democrats, my mother a Bernie Sanders supporter. On a related note, my Senate colleagues will tell you I work in a bipartisan fashion. I've worked on legislation with the majority of committee Democrats, including Ranking Member Brown's staff on reforming our anti-money laundering laws. I've been impressed with the character and acumen of the Democratic staff, and in fact several have been to my home. Credit unions help people achieve the same American dream that my dad experienced. Born in Brooklyn to parents with fourth grade educations, his dad, my grandfather, worked in the New York City subway, putting up the advertising. That man's grandson is now before the U.S. Senate, a testament to American opportunity. But at NCUA, my overarching goal will be extending that kind of opportunity to as many people as possible. I'll have 3 priorities at NCUA. Priority 1 is the same as America's: managing the fallout from the current pandemic and economic downturn. I'm aware that over 50 million people have filed for unemployment since March. And while the 2008 crisis began in the financial sector and then spread to Main Street, the current crisis may be the reverse. Credit unions were chartered to serve those of modest means, and I plan to work with them, the board, and Congress on solutions for those facing financial stress. The second priority is technology. This pandemic has created a test case on how many things, such as this hearing, can be done remotely. I'd like to expand technology's role in reaching the underserved. And if we recall the litigation years ago about Blockbuster Video's late fees and market dominance, the ultimate solution was Netflix and similar American innovations. While this analogy doesn't perfectly align with credit unions, I'm convinced innovation can provide more inclusive financial services. And last, aligning incentives. As we know from the last crisis, we get what we incentivize. One excellent policy that serves as a model here is the less frequent exam cycle for credit unions that get the highest marks on their NCUA exams for safety and stability. This policy lets regulators focus on the more problematic credit unions, while the well-run credit unions strive to keep earning that benefit. This is policy where safety and soundness is well aligned with serving members. If we do this correctly, we'll combat poor quality, high-priced products with better, lower-priced ones. Thank you again for this opportunity, and I look forward to your questions.
Thank you, Mr. Houtman. I'll begin my questions with Commissioner Peirce. Commissioner Peirce, you mentioned in your opening statement that you would like to continue to serve in your role as commissioner because there's more work to be done. Can you elaborate a little more on what you mean by that? And I'm particularly interested in the Commission's work on capital formation, corporate governance, and cryptocurrency.
Thank you, Mr. Chairman. There's a lot of work to be done, and I feel that the work that I came to the Commission to do is not yet done. So first of all, we have to deal with the current crisis, the COVID crisis, and so part of my work will be trying to help the economy come out of that crisis. And I think tied to that is capital formation, which you mentioned. So that's something that I've been working on, and specifically trying to focus on making sure that the entities that are not readily, they don't know lots of venture capitalists, they don't have wealthy friends and family, that those kinds of entities are able to get capital if they merit capital. And so that means looking at our exemptions to make sure that those exemptions make sense, and potentially adding some new exemptions, such as perhaps a micro offering exemption. And then also just seeing whether things like crowdfunding, have they lived up to their potential, or are there things that we could do to make them work better? And then another priority is to, as I mentioned in my opening statement, to try to work on the Commission's attitude toward innovation, which has been, I think, highlighted when we consider crypto. Crypto is clearly going to be here to stay, and I would like us to set up a regulatory framework that works well for crypto. And I think that we have some of the structure in place to do that, but we have a lot more work to do, and I'd like to work on that.
Thank you, and I appreciate any of your focus on those priorities. Mrs. Crenshaw, could you briefly discuss in a little greater detail your priorities, what you would like to focus on if confirmed?
Senator, first and foremost, I think market stability is crucial in the current market turmoil. We need to make sure that investors are protected and that companies are getting the financial relief they deserve. So we need to conduct appropriate oversight to make sure that our market structure is working appropriately. For example, that our circuit breakers are working as they were designed to. We need to make sure that we're providing relief as necessary to companies, such as the crowdfunding release the Commission passed a few weeks ago, and make sure that investors are getting the information they need about companies and what companies are doing during this turmoil with their workers and with their jobs and with funds they're taking, to make sure that investors can appropriately allocate their money as we move forward. I also think retail investor protection is another priority. I want to make sure that our enforcement program is deterring fraud effectively as possible, and that we're holding individuals to account, and that on the rulemaking side, that retail investors are getting the high-quality investment advice that they deserve. And finally, Senator, one of my priorities, again, these are just three, but one of my priorities would be to make sure that we are finalizing the Dodd-Frank rules, particularly the executive compensation rules.
Thank you. And Mr. Houtman, same question. Can you discuss, I know you went through your priorities, but could you just discuss in a little more detail what you'd like to accomplish?
Sure, thank you, Chairman. Obviously, the pandemic is priority one. That means both the health and safety of NCUA employees and how America's 5,200 credit unions can serve their members. This includes how to keep their lobbies open safely, but also making sure they have all the tools to restructure debts, do the things credit unions have always done. I'd like to first say that this is exactly why capital is probably the holy grail of regulation. Credit union system was well capitalized going into this, but it is times like this when capital is the most important. Secondly, technology, meaning we've had a nationwide experiment on how to do things remotely. Some of these lessons we may be able to continue with after the pandemic ends, especially useful for the underserved or those in rural areas. Remote access or online can be very useful to them. And I think I'm well prepared for this after over 20 years working in finance or finance policy. Credit unions are unique animals as non-profit collaboratives, but many of the basics of finance are similar in the industry, meaning risk management, corporate structure, structure meaning the debt you issue, etc. So having the right capital, and I'll mention this lastly, there are 3 states in the Cornerstone Credit League that represent Arkansas credit unions: Texas, Oklahoma, and Arkansas, and only one of those senators is on the banking committee. I've been the go-to person during my years here for all of them, and I think they would speak well of my abilities.
Thank you. Thanks, Senator Brown.
Thank you for the statement, especially about the staff of this incredible banking housing committee. Thank you. We know many credit unions are doing what they can every day to help their members and communities, but today, at a time when we have record unemployment, families struggle to pay rent and put food on the table, we're hearing that some credit unions are garnishing members' COVID-19 stimulus checks to pay off outstanding debts in many cases from these high fees they charge. Over the years, we've heard reports of credit unions charging high fees and interest rates to their members while executives and management get sweetheart mortgages and other loans. These are issues that NCUA board member Harper is concerned about as well. If confirmed, and answer this yes or no if you would, if confirmed, will you commit to crack down on high fees?
Yes, Senator, do everything possible to have better products at lower prices and low fees.
Good, thank you for that. Ms. Crenshaw, you responded a bit. I'd like a little more detail on your response to the chairman. Today, as I mentioned, it's the 10th anniversary of Dodd-Frank. The FEC has yet to finish a number of required rules, including ones that you mentioned to the chairman about compensation. Talk about the importance of these requirements for transparency and accountability for the American public, for investors.
Thank you, Senator. I think these are key to accountability and transparency. As you mentioned, these are required by the law. But it's not just that these rules are mandated. It is absolutely critical that we are holding executives to account and making sure investors have the information they need to make the appropriate investment decisions. And I think clawbacks, for example, is an area that we could do that extremely well. We want to make sure that we're holding executives to account, and we want to make sure these executives don't get to keep money that they didn't earn. So I would commit to you, Senator, that I would work to do all I can, if confirmed, to make sure that we get these rules passed.
Thank you, Ms. Crenshaw. Last month, I sent a letter to Chair Clayton asking him to make sure that regulation best interest is enforced to maximize investor protection, including providing separate enforcement data. Are there ways to get the most out of the rule to better protect American savings and investing for the future, Ms. Crenshaw?
I think it's critical that the SEC work with the Office of Compliance, Inspections, and Examinations and FINRA to drive successful compliance of this rule. That means working with the firms to make sure Form CRS is actually providing information that is useful to investors and that it's information that they can understand. And it's also working with firms to make sure that their policies and procedures are appropriate to mitigate conflicts of interest. And to the degree they're not, we have to be willing to hold those firms accountable when they are not appropriately mitigating conflicts of interest. And so we need to make sure over time that rules are actually changing the status quo for investors. And I would look forward to, if confirmed, working with staff to make sure that that is accomplished.
Thank you, Ms. Crenshaw. First, I'm concerned about your reluctance to vote for monetary penalties and enforcement actions. Earlier this year, you did not approve the SEC's fine against Wells Fargo for misleading investors for years, while management profited and promoted a culture that this committee is very familiar with that led to the opening of millions of fake accounts. It was a known fraud furthered by management with criminal and civil settlements, but you didn't think a fine made sense. Help me understand your thinking.
So when I approach an enforcement action that involves a corporation, I think about who ultimately is going to pay that fine, and if it's going to be shareholders of the company who have already been harmed by the fraud, then I'm very reluctant to vote in favor of a penalty that will come out of their pocket. So that's one of the things that drives my decisions with respect to corporate penalties. But I would emphasize that virtually the entire enforcement calendar, where the commission is unified in voting for the enforcement recommendations. But that is one area where I am concerned that shareholders are getting hit twice.
I mean, there is a difference in this person between shareholders and executives. You've raised in the past the importance of individual accountability. You did at your last committee hearing. I hear a lot about personal responsibility from people in this room. It seems that personal responsibility always about low-income people and people of color, never about the CEOs and corporations that take advantage of them. You've had the chance to join other commissioners and hold those bad actors responsible when they commit fraud or cover it up. You've chosen not to. That is my great concern. As for Wells Fargo, just last week there were news reports that the bank falsely told bankruptcy courts that borrowers requested forbearance on their mortgages due to COVID-19. Those requests were made without the borrower's knowledge and could lead to confusion and risk of foreclosures for borrowers in bankrupt proceedings. There we go again with Wells Fargo. I don't know what it will take for their management to stop abusing the customers, but voting against penalties for their management certainly isn't it. Thank you, Mr. Chair.
Thank you. Senator Conley.
Thank you, Mr. Chairman, and congratulations to all three of you on your nomination today. But of course, I want to congratulate in particular my indispensable advisor, Kyle Houtman. I think most senators can relate to how I feel about this development. On the one hand, Kyle will be a terrible loss to my office for work that we've done on behalf of Kansans and all Americans over the last 3 years. But on the other hand, our loss will be the NCUA's gains and the gains of everyone who does business with or is affected by credit unions in their communities. I'm very confident that our credit unions will benefit by having Kyle's judgment and knowledge on the board. I'd say I know my staff is sad to be losing Kyle this year as well. Here's an email from my deputy state director who leads all of our casework earlier this year when she heard the news that Kyle had been nominated. The subject line is, "You can't go!" exclamation point. And then in the body, "I won't have it!" triple exclamation point. Seriously, we are going to miss you. The whole state staff is bummed because no one can ever take your place in keeping us informed, which I think is a testament to how well Kyle has worked, not just with my staff, but with all of your staffs and with the committee staff as well. Likewise, I'd like to enter into the record, Mr. Chairman, the letter from the head of the Arkansas Credit Union Association. I will also quote from that letter here. On behalf of the Arkansas Credit Union Association, I'll say that we probably feel the same way you do, that he'll be difficult to replace if the NCUA is lucky to have him. I've gone to Washington for a couple decades now on behalf of Arkansas credit unions, most of which are very small rural institutions. Our largest credit union has just over $1 billion in assets, which would be considered small even by community bank standards. The rest are even smaller, where you can count on one hand the number of ATMs they have. While advocating for these community-based lenders, I've encountered a lot of congressional staffers. May be the best I've dealt with. Given his background at large international finance firms, you might think Kyle wouldn't understand the needs of our members who are mostly low or moderate income families, yet it's quite the opposite. He has gone above and beyond to listen, respond quickly, and empathize with their concerns. His knowledge of financial markets is an asset, not a liability. I'm aware that the NCUA board members aren't like Senate staffers, meaning I'll no longer be a constituent, but rather someone working for the institutions Kyle will be regulating, but I think you'll agree that he'll continue to be fair, professional, and serious about his work. Kyle is also indisputably bipartisan, working well with others. Like all the senators on this committee, I sometimes get in the occasional political scrap, but Kyle nevertheless approaches his job like a diplomat, working with all of your staff, working with the committee staff, keep dialogue open, keep the people's business going forward. He's worked on innumerable bipartisan bills and letters, including on issues related to credit unions, plus bills on taxes, retirement policy, as well as other economic policies. He also serves as the staff director for the Economic Policy Subcommittee that I chair, leading the hearings that we've conducted during this Congress and the hearing that we'll be conducting tomorrow, which I encourage all senators to join us. I often hear praise from constituents for Kyle, and the two most common refrains are he's easy to work with, and few staffers have his in-depth knowledge and experience in all matters financial. I trust this hearing will go well today, not just for Kyle, but Ms. Pierce and Ms. Crenshaw, and I hope that we can move all three nominees forward promptly, perhaps on simply a voice vote. So I will now close, not with a question, but simply to urge all of my fellow senators to support Kyle's nomination. I can assure you, you'll be an excellent pick to serve on the NCUA. Thank you.
Thanks, Senator Cotton. Senator Tester.
Yeah, thank you, Mr. Chairman. Ranking Member Brown. This is for the SEC. Tom's, I don't need to tell you that the SEC considers small and mid-sized businesses, along with businesses in rural communities and those outside of big cities. So the question is, how will you ensure that efforts to address the impacts of the pandemic and economic crisis are directed toward businesses across a range of sizes and geography?
Thank you, Senator. That's a very important issue and close to my heart as well. And so one positive change that we've had in recent years is we now have a small business advocate at the SEC, and we have a small business capital formation advisory committee, which has representatives from all across the country on it. And so together with them, I plan to work on issues that will further their interests. So, for example, a month or so ago, we adopted some temporary relief related to crowdfunding, which was intended to help businesses that have been in existence for some time and may be struggling to make it through this period. You can imagine that there are lots of people in the local community who know these businesses well and would like to support them with funding. And so that's something that we worked on in direct response to things that I heard from people on that committee, and I'll continue to do that.
Crenshaw?
Thank you. Senator, I think it's key that we continue our appropriate oversight of the markets during this time. We need to make sure that the markets are functioning properly for businesses of all sizes. We also need to make sure we're giving investors the information about companies so that they can appropriately allocate their decisions to the best ideas out there. And I, too, would like to work with the Small Business Advocate. I've had the pleasure of working with Martha Miller over the past few years and working with her to think through ideas to make sure that the capital is going to the best ideas out there. And I think one of the ways that we can do that is think through whether our regulations are, while providing appropriate investor protections, are also clear and straightforward so that everybody can understand them and everybody can follow the rules of the road without necessarily having a close proximity to a lawyer or a large compliance program. So I would look forward, if confirmed, to working with her to make sure, and her office, to make sure that all businesses are getting the capital they need and getting the protections they need during this market turmoil.
Another question for both Mrs. Crenshaw and Commissioner Pierce. Could you just give me very briefly what you've been focused on over the last 6 months of your year as a staffer at the Commission?
So the Commission's been quite busy over the past 6 months, but among the things that we've been focusing on is expanding the ability of the private markets to work to serve companies of all sizes. We've also been working on trying to strengthen the regulatory framework as it relates to equity market structure. And we have also been working on, I personally have been spending some time thinking about innovation, as I mentioned in my opening statement, trying to think about how we can develop a framework for digital assets that will give people the certainty they need to conduct innovation in the United States.
Over the past few months, when I wrapped up my time with Commissioner Jackson, we were working on the buybacks issue, as well as the market structure issue, such as the transaction fee pilot. And then when Commissioner Jackson returned to New York, I returned to the Office of Compliance and Examinations, and for the past several months have been working with the team there on a variety of inspections, that are hopefully going to help make markets safer for investors.
Okay, Mr. Crenshaw, Commissioner Pierce, you both have been critical of legislation from this committee that has been signed into law. How will you work to implement regulations, including those that you may have been outspoken about, but carry a congressional mandate?
So when I worked on the committee 10 years ago to the day, as Senator Brown mentioned, Dodd-Frank was passed, and I had a lot of concerns about Dodd-Frank. One piece of that law was security-based swap regulation, and that was something that fell within the purview of the SEC. When I got to the SEC, Chairman Clayton asked me to take the lead on getting that over the finish line. It was something that we were not done with, and I thought it was important to implement the statute, and so I worked on that. It took a lot of my time and my staff's time, and I remain committed to listening to Congress. Having worked on the staff there, I understand the importance of congressional mandates, regardless of whether they would be my optimal design or not.
As Commissioner Peirce mentioned earlier in the testimony, most of the votes of the Commission are actually done on a bipartisan or even unanimous basis. And so I would want to make sure that I'm approaching every rule confirmed and every enforcement case with that approach in mind. I would like to make sure that they're bipartisan and unanimous if possible. And I would want to make sure that I'm working with staff, even if it's something that I may not end up agreeing with them on, but I want to reach that result if possible.
Thank you. Senator Brown.
Thank you, Mr. Chairman. First of all, I want to thank all of our nominees for your willingness to serve. Ms. Peirce, I'd like to start by asking you a question about market structure. When it comes to market structure, I understand one reform that you'd like to consider in the future would be to reform the circuit breakers that require stock exchanges to halt trading when prices move past a certain point. Can you tell us a little bit more about what your thinking is in this particular area?
Sure. So the circuit breakers were put in place in anticipation of events such as we saw this spring. And I think that they actually, the markets have worked remarkably well in a period of intense volatility and volume. And so I've been very pleased with that. And the circuit breakers have generally worked quite well, but I think that we might be able to make some tweaks so that they would work even better in should another situation like the one that we experienced over the last several months occur. Now, it will take time for us to figure out what to do, but one thing that may be a possibility is to try to work on the circuit breakers so that they don't trigger so quickly after opening in the morning, because the purpose of a circuit breaker is to give you give the market a chance to think and sort through uncertainty, and if they've had that time to do that overnight, perhaps we don't need to have those circuit breakers triggered so early in the morning.
Thank you. Ms. Crenshaw, one concern I had early on in the COVID-19 pandemic was whether or not our exchanges would be able to operate in New York, Chicago, and other cities in the event that widespread lockdown measures were put in place. Thankfully, our exchanges have operated remarkably well during the pandemic. Looking back over the past few months, are there any important lessons learned from continuity of operations standpoint?
I think one of the things we need to make sure from a Office of Compliance, Inspections, and Examinations perspective is that the processes and procedures are in place so that these exchanges are ready to go. We have a group that oversees the exchanges, and one of the things they look at is making sure that they have continuity processes and procedures. And I think we need to continue to look at those with all possible crises in mind, making sure that they're able to telework, making sure that they have backup systems. And I look forward to working with them to make sure that all of those processes and procedures are designed appropriately.
Thank you. Mr. Hauptman, I've heard concerns from some credit unions about the burden that capital rules like CECL and other regulatory standards pose. To that end, Chairman Hood has said that CECL will do more harm than good. From a broad perspective, how do you view the capital structure for America's credit unions, and are there areas that the NCUA or Congress need to revisit?
Yes, Senator, thank you for that. I'll say three things. One, my priority is capital, capital, capital. Capital is the holy grail of regulation. Coming into this crisis, the credit union system as a whole was well capitalized. They were significantly above what they're statutorily required to have. And that is good, and it is times like this when capital matters most. This is why we have it. When it comes to CECL, I'm aware that there's a delay. The number one thing a regulator can do, because obviously the rule itself is up to Congress to change, or FASB. The number one thing they can do is, if CECL goes into effect and they have to take write-downs on their assets, make sure that the regulators understand that their capital levels didn't really just go down. They have to go out and raise a lot. If it goes into effect on Jan 1, 2022, let's say, their balance sheet on Jan 1 isn't any worse than it was on December 31st. But things like CECL can make it appear it is worse. So that is one concern I heard from the Arkansas credit unions and the others in the Cornerstone Credit League in Texas and Oklahoma is, even if we have to go forward with CECL, please understand and communicate to us that you get that our capital levels aren't necessarily worse and our balance sheets aren't worse off just because they may look worse off when you take these expected credit losses. And obviously what they say is the notion that a loan may not be repaid has been going on since the dawn of banking. But as a regulator, you want to make sure you're communicating that you understand the changes they may have to make.
Thank you. Thank you, Mr. Chairman.
Thank you, Senator Rounds. Senator Menendez, are you with us? I think Senator Menendez may be joining us soon. Senator Warner, are you with us? I'm going to go through the list here. Senator Warren? Senator Cortez Masto?
I am here.
You may go ahead.
For some reason having difficulty. Oh, there it is. Thank you so much. Let me just say congratulations on all of your nominations. Thank you for your willingness to serve, and I'm excited for you, excited for all your families. Let me start with both Commissioner Peirce and Mrs. Crenshaw on cryptocurrencies. I know the SEC has taken a position that direct regulation of Bitcoin is not within its purview. However, the SEC has chosen to regulate certain cryptocurrency-related digital assets. For example, last week, former lobbyist and convicted felon Jack Abramoff pleaded guilty to misleading investors with a new cryptocurrency. So my question to both of you is, what are your concerns about potential fraud in cryptocurrencies? And where do you think the SEC's role is when it comes to addressing that fraud? And Commissioner Peirce, let me start with you.
Thank you, Senator. I do think that we've seen a lot of fraud with a crypto label on it. Now, some of it is just run-of-the-mill fraud where someone has no intention to create a crypto project. They just have an intention to steal people's money. And often those are cast in a way that fits clearly within our mandate because it's an offering. They're essentially raising money for what they say is a common enterprise, and they're making misrepresentation. So it's clearly within our mandate. I think one thing that we could do to improve the landscape is to set out clear guardrails and clear guidance about when something is a securities offering, or, as I've suggested, create some kind of a safe harbor that allows these initial coin offerings to happen, but allows them to happen with certain disclosures attendant, and certain people would have to identify themselves. And I think that would be a good way of separating the wheat from the chaff. So I think enforcement is important, but it's also important for us to put out clearer guidance.
And Mrs. Crenshaw?
I think the crypto market is a young market, and with a young market, there is necessarily a lot of risk. And so I think it's important, to the degree that these are securities, which the chairman, I think, has made an assessment on in certain cases. So that to the degree there are securities, I think it's important that we are protecting investors and making sure we're holding folks accountable when they're fraudulent in this market, it's important to provide these protections so that the market is trusted and that it can grow and innovate over time. And I think the chairman has done a good job in this area to make sure that we're providing appropriate protections while letting the market innovate. And to the degree that they are either currencies or commodities, I think we need to work with other agencies to make sure we are still providing those appropriate protections.
Thank you. Mr. Hoffman, I know you have an interest in digital currencies and blockchain technology. Do you have any specific goals related to distributed ledgers or digital currencies if you're confirmed to the NCUA Board of Directors?
Yeah, I appreciate the question, Senator. First, I do want to mention it's been a pleasure to work with your staff on the subcommittee and as well on anti-money laundering reform. When we had 88 million checks that were going to go out, paper checks through the old mail with the stimulus payments, that would have been a great opportunity if we had, for example, a digital dollar. NCUA doesn't have a ton of oversight over that. But when we saw all those people desperately in need of that money, people with rent coming up, people with bills to pay, had we had digital currency, it is possible that we could have a blockchain-based digital dollar and we could have gotten money to those people immediately and securely with limits on fraud. Much the same way if there's a disaster in another country, we can deliver money to those folks much more quickly and in a much safe manner.
Thank you. I appreciate that. Let me jump back to Mrs. Peirce. Last year I wrote a letter to Senator Round Van Hollen asking FINRA to limit the ability of broker-dealers and other financial professionals to inherit money from their clients. In response, FINRA proposed a rule banning such potential use. And that rule was recently sent to the SEC, just comments on the proposed rule. To the extent you can now, do you believe regulators should prohibit financial advisors from receiving requests from their clients? So to the extent that you can now answer that question, or at least
Well, I can't really comment because the rule is under review, but I will say that this is an area where it's so important for us to pay close attention because so many seniors especially are very vulnerable, and I think anyone is going to be suspicious when a financial professional is inheriting money from a client, and so I think it's an area we need to work on. We've got excellent people at the commission working on those kinds of things, and FINRA is committed to it as well. So I commit to working with you on that issue.
Thank you very much. Mr. Chairman, thank you. Thank you all.
Thank you. Senator Kennedy.
Chairman?
Yes. I can hear you, can't see you.
Well, let me see if I can fix that. Can you see me now?
Yeah, we can now.
Great. If you would gavel loudly, Mr. Chairman, when I'm done or close to being done with my time, because I can't really see the clock that well.
I promise I'll do it.
I thank you for that. Captain Crenshaw. He is captain, is that right?
That's correct, Senator.
Captain, have you ever bought a stock?
I have, Senator.
How long ago was that?
A fairly long time ago, Senator.
What did you do before you bought that stock? Did you research it?
Probably not thoroughly, Senator.
Did you read the prospectus?
Probably not.
Do you have any idea how much it costs to put together a prospectus?
I know with the printing costs, it's not an inexpensive process.
What about the legal fees?
Given the law firm rates around here, I imagine it's fairly expensive as well.
I'm not arguing against the idea of a prospectus. I just don't think most retail investors read a prospectus. They
in doing their due diligence, may download it, but it's long, it's tedious reading it. If we really wanted to inform retail investors and some institutional investors, would we not require a prospectus to be drafted in such a way that it's more accessible to retail purchasers of equities? Can you hear me? Can you hear me?
Yes, I can hear you.
Did you hear my question?
I did, yes. Can you hear me?
I can hear you. Yes, ma'am.
I know the Division of Investment Management is undertaking a project to address just that question called the Retail Investor Experience. And they are working with investors to make sure that the disclosures, while appropriate for all level investors and providing the information that is critical to anyone who may want it, they are working to make sure that these disclosures are less daunting and much more accessible.
When do you think they'll have that ready?
I don't know the timing of that, Senator. You'd have to ask the chairman that, but I know that they are working on that project, and I would look forward to working on that with them if confirmed.
Well, I'm not suggesting that we don't need full disclosure. Quite the contrary. I think that separates our markets from a lot of markets in the world. I just don't think that retail investors benefit as much as they could if we figured out a way to make it more accessible, not physically accessible, but accessible in terms of the knowledge that our law requires to be conveyed. Member Purse, am I saying that right?
Kamar.
Commissioner, do you think equities that are owned by foreign companies, whether or not they're subsidized by their foreign governments, should be allowed to flaunt our audit laws?
If they're listed in the United States, and I think it's really important that they be subject to the same requirements. It's an area that we've been working on with the PCAOB for quite a long time now, and it's been one of great frustrations.
I don't have much time left. And look, I'm a big Jay Clayton fan, but why haven't we done more about it?
Well, I think that it is. There are a couple of things to do. One is to make sure that the disclosure is there about the risks of investing abroad in foreign companies.
Right, but why? Look, I don't have the 20 seconds. The Senate's passed a bill that says if you're a foreign company, you have to comply with the same audit requirements as everybody else, and it's passed the Senate. Wall Street has unleashed hell lobbying against it in the House, and that makes no sense to me. And why isn't the commission stepped up in a more vocal manner?
Well, just a couple weeks ago, we had an emerging markets roundtable at which this was the very discussion, and I think some productive suggestions came out of that. And so it's something that's certainly on our minds, and we've been quite clear about the inability for us to audit, to oversee the work of auditors in certain jurisdictions, especially from China.
Thank you, Senator Menendez.
Thank you, Mr. Chairman. Commissioner Purse and Ms. Crenshaw, I want to start with an issue I raised with Chair Clayton the last time he was before the committee. I've been increasingly concerned about the ability of foreign actors to manipulate U.S. companies through their investments, particularly in the media and technology sectors. And given the stress in today's economic environment, they're even more vulnerable to predatory practices and behavior by foreign investors looking to gain a foothold in the U.S. media industry while skirting our transparency requirements.
Section 13D of the Securities and Exchange Act of 1934 requires investors who become the beneficial owners of more than 5% of an issuer's equity securities to report certain identifying information to the SEC. But if undisclosed or disclosed without sufficient information, such ownership stakes could undermine the free flow of information to the American public. How do each of you believe the SEC should monitor equity markets to ensure that foreign investors are not accumulating significant shares in public companies, especially in the media and technology sectors, without filing the requisite disclosures?
That's an issue that we deal with both through our enforcement and through our Division of Corporation Finance and its review of issuers. That said, it can be a very difficult thing to track, and I agree with you that it's really important that we have transparency. That's why those rules are in place. So we have brought some enforcement actions, and I think it's an area where whistleblowers also could be valuable in pointing us to potential violations.
Ms. Crenshaw.
Thank you, Senator. I agree with your concern, and I agree generally with what Commissioner Purse said. I do think this is a rule that we haven't looked at in a very long time, and to the degree it is a rule that is not operating appropriately, I would be open to working with your office, if confirmed, and the staff to think through whether ways that we can address those concerns a little bit better.
Well, I appreciate both of your answers, and Commissioner, I appreciate your forthrightness in terms of saying it's a difficult area. I know, for example, of one large Hispanic media broadcasting system that had a series of foreign investors that, unbeknownst to the company, they did not disclose to the SEC. And of course, then you have the FCC obligations to disclose, but you can't disclose it if you don't know from the SEC filings that someone has made, investments beyond, I think it's the 5% requirement. And so therefore, you find the ability of a foreign entity to try to take over media companies in the United States with then the ability to try to influence the results of what they are broadcasting. And so I think we need to find a way to beef up the abilities to do this. Commissioner Purse, in your experience, do you think that the Commission has the ability to independently verify the information in a Section 13D filing, or to verify whether a foreign entity should have filed a 13D disclosure?
I mean, realistically, we have a lot of issuers, and there are lots of filings. So realistically, we can't verify everything that's in every filing. As Ms. Crenshaw said, I'd be happy to work with your office and think through ways that we could have better information. I also hope that you would convey the information about the one that you are aware of to me or others at the SEC, and I'd be happy to work with you on that.
We'll follow up with you. Let me ask you, Commissioner Purse, recent reports from the New York Stock Exchange and the CBOE show that off-exchange trading rose to a record 42% of all volume during the COVID pandemic. During this crisis, when the markets need greater transparency and price discovery, we have never in history had less trading taking place on exchanges. Dark markets are less regulated and provide little transparency. So, Commissioner, are you concerned with this trend in off-exchange trading, and what's the SEC doing to address it?
Our exchanges are very important for transparency of our equity markets. We have taken seriously the concerns that have been raised about off-exchange trading, and we adopted a rule regulation that deals with alternative trading systems and disclosures and transparency around them. And I'm certainly open to thinking about other ways that we can increase transparency and make sure that our equity markets are able to operate as efficiently as possible.
Mr. Chairman, may I have your indulgence for one question, Mr. Halpern?
Yes, you may.
Thank you very much. Mr. Halpern, credit unions have a broad and diverse membership, and the NCUA counts diversity and inclusion among the agency's core values. But still, not a day goes by where we don't see a story about a person of color being discriminated against by a financial institution, whether that's being unfairly denied a mortgage or having the police called on them by bank employees on the unfounded suspicion that they are trying to cash a fake check. So share with me and the members of the committee what personal or professional experiences do you bring to NCUA that will enable you to advance diversity, inclusion, and non-discrimination within the credit union system?
Yep. Thank you, Senator. Obviously, extraordinarily important topic. First off, you have to enforce the laws on the books, and we'll do that vigorously. Fair Housing Act, Equal Credit Opportunity Act, Fair Credit Reporting Act, and where appropriate, take appropriate action. If I could just step back a second, big picture, my view on this is no entity like NCUA or credit union or this country can fully succeed unless we make use of all of the talent around us. We're not going to be as prosperous, as safe, and a more fair society unless we use all the talent, not just some of it. That is fair for those who don't have the proper opportunity today, but it's also better for the rest of us. So that's the mentality I'm taking into it, including looking at ways to start more credit unions. There were only 2 last year. One was a minority deposit institution. That was good to see. But I want to do a top-to-bottom review of what are the pain points? Why did it take so long to start credit unions? And possibly get more minority depository institutions. Lastly, I'd like to expand, if it works well, the Second Chance initiative they've done at NCUA. People with minor criminal convictions years ago having the chance. That's an example right there, and I've seen it with friends and people from my high school. That's changed their entire trajectory, one minor conviction when they were 19. So we'd like to see how that works out and expand that. That is, again, an example of an untapped pool of talent this country would be better off using.
Thank you. Thank you, Mr. Chairman, for your courtesy.
Thank you. We have 4 senators who've checked in, but I don't see. I'm going to go through and see if any of them are online with us. Senator Warner. Senator Warren. Senator Van Hollen. Senator Jones. I think they may have all had to go to other hearings or other business. That concludes the questioning. Senator Brown, did you want to make a statement?
Mr. Chairman?
Oh, wait. Senator Warren. Yes, go ahead.
Thank you, Mr. Chairman.
Seeing more show up, too. Go ahead.
Okay, I'll go ahead and go. Thank you. So later today, Republicans on this committee plan to confirm an unqualified nominee to the Federal Reserve. They will do so 10 years to the day after President Obama signed Dodd-Frank into law to protect our financial system. Confirming Judy Shelton to the Federal Reserve is a mistake, and it will endanger our economy, and I'll be voting against her confirmation, and I urge my colleagues to do the same. President Trump's total failure to protect this country from a public health crisis has now caused a devastating economic crisis. But while workers and tenants and small businesses are still struggling, private equity companies are making big money and are raking in profits by taking over nursing homes, department stores, newspapers, grocery stores. They bleed these companies dry, they put workers out of a job, and they put our economy at risk while they do it. The SEC is supposed to protect our economy from these risks, and I want to understand how both of you think about the threats that private equity industry poses to workers and to the economy. So, Ms. Crenshaw, I'd like to start with you. When private equity firms gobble up other businesses, they use highly leveraged loans to do it. And that means they're loading up the companies they control with debt. During an economic downturn, what are the risks to the financial system if these companies start to fail?
Senator, I share your concern in this area, and one of the things that concerns me, and I think poses the greatest risk, is that we don't necessarily know. We don't have the data to know whether it's funds, insurance companies, or banks that hold these products. And I think it's absolutely crucial that we understand that data so we can assess the market and appropriately determine how to appropriately protect investors from the spillover effects.
All right, so thank you very much. Dodd-Frank directed the SEC to write rules to address these risks, and in 2014, the SEC proposed requiring private equity firms to keep some skin in the game when they make risky bets. Unfortunately, the courts overturned these rules, but my Stop Wall Street Looting Act would put risk retention requirements back in place. Okay, but that's about another bill. Let's talk about something the SEC could do right now to address this problem without any new legislation. Currently, private equity discloses the amount of debt that their companies have taken on, the fees they charge, and the performance of their investments, but all that terrific information is kept secret. That means that investors and the broader public are left in the dark about risks in this industry. So, Ms. Crenshaw, do you believe that requiring private equity funds to disclose more information about their investments would help protect both the economy and workers and help make the market more efficient?
I think the SEC has long said that only through full and fair disclosures can investors appropriately assess the markets and adequately invest their capital and allocate their capital. And so I think disclosure would be important to investors.
Good. Well, I'm glad to hear it. Last month the SEC itself acknowledged that there are widespread problems even in the limited private equity disclosures that do exist. Commissioner Peirce, what about you? Do you agree that private equity companies should have to disclose basic information about the risks of their investments, the fees they charge, and how well those investments are performing?
The investors in private equity funds, to the extent that they share the concerns that you have a fair amount of leverage in terms of trying to get the disclosure they want. And so given the way the market is structured, I think it's less important for us to focus on private equity disclosures and more important to focus on the disclosures that are reaching typical retail investors.
I have to say, Commissioner Peirce, I'm not surprised to hear that you are not interested in requiring more disclosure from the private equity industry. Nothing in your record suggests that you're willing to take on powerful interests to protect either investors or workers. That's why I think it would be a mistake to confirm you for another term. The SEC's job is to protect investors, to maintain fair, orderly, and efficient markets, and to facilitate capital formation. That's a direct quote. And that means a commission that won't let private equity funds loot American businesses. It means a commission that is actually committed to transparency. It means an SEC that has the courage to stand up to private equity. That's what we need. Thank you, Mr. Chairman.
Thank you, Senator Warner.
Thank you, Mr. Chairman. Appreciate having this hearing. Let me start by saying that I agree with Senator Warren, Senator Brown, a number of my Democratic colleagues on the nominee, Judy Shelton, that we'll vote on this afternoon. I found her personally and enjoyed meeting her, but I do feel her views at this moment in time are not right for the independence of the Fed. I want to move to Ms. Shelton. Ms. Crenshaw. I had some earlier discussions with Crenshaw. You should probably recall I talked about a GAO report that I had requested about ESG measurements. Now, the report found that 12 of the 14 institutional investors that were interviewed use ESG metrics, but there's an extraordinarily wide variety of information that is provided. In fact, we've seen enormous numbers of both funds and companies say they are interested in ESG standards, metrics, value this kind of disclosure. But as the GAO report pointed out, even when it came to something as basic as measurement of carbon dioxide emissions, there was a whole series of different different standards used. And now, we could all, my colleagues may not believe that carbon emissions are contributing to climate change or not, but it would seem to me if investors want this information, there ought to be some ability to standardize what these metrics look like. We also know that the Investor Advisory Subcommittee at the SEC said that there's a lot of business risks and decisions and strategies that stand upon ESG factors, and I know you're not going to want to prejudge something that may come before the commission, but when we're looking at something where the investor community says this is important, don't you think we need some level of standardization on these kind of standards rather than the patchwork that we have right now? Crenshaw, would you address that issue?
Senator, yes, and I agree with you, and I think investors are looking for these ESG metrics. The largest asset managers in the world are incorporating ESG factors into their comprehensive risk programs, and I think we need to think through, we haven't looked at this area in a while, and I think at the SEC we need to think through how best to provide the information that investors are looking for, and that is information that is comparable and that is accessible to investors. And I think we need to do that through a roundtable or think through additional guidance. And I would look forward, if confirmed, to working with your office and the staff on the best way to do that.
And I just simply like to say, since I would argue you need to move somewhat aggressively, you know the Europeans are moving to formalize these standards. If we did nothing, this would be one more example of why America is giving up its long-term leadership. So I would hope you would consider even advocating for a formal task force. I don't think we'll one-off roundtable. You want to add any other comments or more questions? Let me also, Mr. Chairman, I don't see my timeline. How much time do I have left?
You have 1 minute and 20 seconds.
All right. One of the areas that I'm particularly also focused on is human capital disclosure of human capital management. I think the pandemic has pointed out the need for that level of public company reporting on human capital. I know the SEC has moved on this area already. Ms. Crenshaw, would you very briefly tell me your thoughts on human capital disclosures?
Yes, Senator, being careful not to prejudge a rule that I might be asked to vote on if confirmed. I do think generally that human capital disclosures are information that investors need. I think this is, and want, this is information that goes to the long-term financial growth of companies. And again, I think this is an area where we need to make sure that we are providing investors with information that is both accessible and comparable. And to the extent we can use quantitative factors here, I think that would be appropriate.
Well, thank you. And I know my time is about to expire. I'll put my questions in for the record. I do, before I yield, though, I do want to commend Mr. Kyle Hoffman for his work with our office and a number of others on, I think, very significant legislation, the anti-money laundering legislation that you, Mr. Chairman, and Ranking Member Brown have been such great leaders on. I would just want to say to Kyle, thank you for your good work and working with our office. And if you are confirmed, I hope you'll bring that same spirit of collaboration and bipartisanship to the NCUA. So, thank you, Mr. Chairman.
Thank you, Senator.
Senator Van Hollen.
Thank you, Mr. Chairman and Ranking Member Brown, and to the witnesses today. Let me start with Mr. Helpman. And I have a question on setting caps on interest rates to prevent predatory lending. As you know, credit unions have traditionally served as safe institutions for their members to borrow at reasonable rates. Some time ago, the Congress enacted legislation to protect military families, active duty military and their families from predatory rates and interest rate gouging. We established a 36% annual cap on loans to active duty service members. Senator Brown and others and I have introduced legislation to extend those protections to other Americans, one for the long haul, but also one during this pandemic when we see lots of predatory lending abuses. Would you support the idea of establishing a 36% interest rate cap during this pandemic to prevent predatory lending abuses?
Thank you, Senator. Obviously, an important topic for anyone that's been in a cash crunch, and I'm aware of the situation where just outside many military bases you see payday loan places and pawn shops, etc. At NCUA, the only ability we'll have is working to make sure there are better options. The interest rates are set by statute, and then they have their payday alternative product, which is 10 points higher, 28. I think the regulatory philosophy I bring to the table here is a better deal. In the case of extraordinarily high interest loans, the main thing is to provide better options, fight fire with fire. When somebody has extraordinary high interest loan and their credit union can give them one to refinance that and get out of that. So the ability I'd have at NCUA is to make sure that, number one, there are better alternatives. They have to be significantly better or no one will use them. They have to be better products at lower prices. And second of all,
my time's limited. Sure. Do you support the law that was passed by Congress to protect military families?
Matters before Congress are probably best left to Congress, but at NCUA, you can be sure that all those military members, and there are many in credit unions, will have better options than the type of loans.
You have an advocacy role as well, it seems to me, to protect your members.
Sure.
And one way to protect your members is to make sure credit unions are offering reasonable rates. The other is to make sure that there are not others out there that are charging outrageous, excessive rates. So it's a pretty simple question. Would you support our proposal to extend to others around the country the protections that we as a country currently extend to military families when it comes to excessive interest rates?
Again, I shouldn't comment on Congress, but you can count on me to make sure there are much better options and lower price options than what you're talking about. That includes financial literacy and lower fees across the board, so they don't get in this cash crunch to start with.
Right. Well, one way to do it is to make it. One way to do it is to make sure that those outrageous practices are banned. Let me ask Commissioner Peirce a question with respect to the proposed advisory rule, and I'm not going to ask you about the substance of it because I know it's a pending matter. But when we had the chairman before the committee, Chairman Clayton, I asked him about comments he made about how the proposed rule was supported by what he described as Main Street investors. And it turned out that his comments were based on letters that he'd received from people claiming to be Main Street investors, but in fact they all were manufactured by a front group called 60 Plus. This is a dark money group, a secret money group, and it turned out that it was entirely fabricated. So my question to you is, do you have in the record before you comments from genuine Main Street investors, sort of mom and pops? Because I can tell you, when it comes to this proxy rule, I've not heard from any sort of mom and pop investors about why the proposed rule is something that would be helpful to them. Have you?
Well, we've got a record that's chock full of comments representing a wide variety of viewpoints. I think one problem with this particular rule is that, with this particular area, is that you have a few extremely large shareholders who often operate to the disadvantage of mom and pop shareholders of the kind that you're describing.
So, Commissioner, first, with respect, my question was pretty simple, right? Because Chairman Clayton used what turned out to be fabricated letters from Main Street to argue that he was proposing to protect Main Street investors. I have a simple question. In your record before you, can you identify for us today any comments from genuine Main Street investors about this rule?
I'm happy to get back to you on identifying particular letters if that's something that you'd like me to do. Obviously, the integrity of our comment process is very important, and so that's something that we rely on commenters to communicate their views with us, and we get comments from a wide variety of perspectives. Happy to get back to you on this particular rulemaking if you'd like.
Yeah, I would appreciate that, because I think the reason the chairman had to settle on what turned out to be manufactured comments was there weren't any authentic ones. But I appreciate that. Thank you.
Thank you. That concludes the senators. I understand, Senator Brown, you'd like to ask one more question.
And I want to thank Senator Van Hal. I think his question was really important. and we will all be awaiting your response, Ms. Burse, your response in writing to what Senator Van Hollen asked. So thank you. I have a real quick question, Mr. Hoffman. You talked about technology. Give me an example of what you have in mind.
Well, they've done, it's been a nationwide, almost worldwide experiment in how we do things during a pandemic. For example, this hearing is online, and prior to March, we'd never done that before. They've done exams virtually. It is possible that could save all parties a little bit of money or do some of it virtually. So that's an option. I would mention, 3 years ago, they passed a bill, I think it was Senator Scott's Mobile Act, to be able to open an account online and be able to upload your identification information. That came in very helpful. It was very helpful during the pandemic when a lot of people didn't want to physically go to a bank or the lobby may have been closed. So things like that. Again, the only maybe silver lining from this pandemic is we've done a lot of experiments, and some of these things, like perhaps a virtual examination or opening an account online or e-signatures and verifications, some of these things may be useful post-pandemic.
Okay, well, thank you. It raises some concerns, and I appreciate that your response. But so often technology is used for predatory behavior with technology companies and new innovative products just exploiting workers, especially low-wage workers, when we know that financial services does not really work very hard to reach the underserved. So I'm very concerned about your thoughts there. Last comment, Mr. Chair, and I thank all three witnesses today. I hope our nominees think carefully about how these agencies enforce the law, the two agencies which are nominated, and hold bad actors, including management, accountable. It's not enough to talk about strong enforcement, individual accountability only when you're in front of Banking Housing Committee. Penalties are an important deterrent. Penalties are a very important deterrent and signal that the abuse of customers, the abuse of workers, the abuse of other stakeholders will not be tolerated. I hope that you all remember that, especially after your conference. Thank you, Mr. Chairman.
Thank you, Senator Brown. And that concludes the questioning for the hearing today. To our witnesses, to our senators, any questions for the record are due this Thursday. And I'm asking our witnesses to please respond to those questions by Monday so that we can move quickly. With that, again, thank you very much for attending this hearing and for your willingness to serve. And this hearing is adjourned.